A very good evening, dear students. Welcome to BAJIRAO IAS Academy, the Hindu News Analysis. So, like every day, we'll be discussing some important topics in today's The Hindu newspaper. And in fact, all these topics that we are going to discuss are very important for prelims and mains examination. So let's understand these topics in a detailed and in-depth manner so that this discussion will be helpful for us in our exams. So the first topic that we are going to discuss now, it is about an article that has been given in the Hindu newspaper. So it has been primarily talking about India's female labor force participation, right? So, and it also discusses about the tariffs, the 50% tariffs that US has imposed on Indian goods, that is going to affect overall employment scenario in India. And apart from that, how women have a lot of potential and how we can actually tap the potential of women so that the important contribution that the woman can make for India's growth rate. So also remember that we have an objective or an aim of becoming a developed country, or Viksit Bharat, by the year 2047. By 2047, India is going to celebrate 100 years of its independence. So therefore, let's understand all these different dimensions in a detailed way. Now, the context is that, it is being said that India is now became the fourth largest economy in the world. And in fact, India's overall economy as valued at 4.19 trillion. Right? So as of now, India's total economy valued at 4.19 trillion, and India is the fourth largest economy in the world. And since it has valued at 4.19 trillion and fourth largest economy, so we can say that India has earned a firm place in the global growth story. And in fact, it is also expected that India would become the third largest economy in the world very soon after US, China, and India is going to become the third largest economy by the year 2030. So therefore, recently what happened, US President Donald Trump has imposed 25% tariffs on Indian goods which are exported to US. Now additionally, US President has imposed another 25% tariffs on Indian goods, total 50% tariffs on Indian goods. So that is going to severely hit India's industries, so which are primarily based on exports. So therefore, a proposed 50% tariffs by the US President Donald Trump on Indian exports is going to result in a formidable disruption of India's industry, India's exports, and employment as well. And in fact, this 50% tariffs on Indian goods by the US is going to target around 40 billion US dollars of trade. Right? So it is going to affect 40 billion dollars of India's exports to US. And it is also said that it is going to affect 1% of India's overall GDP as well. And particularly, this $40 billion trade with US is going to be disrupted because of the 50% tariffs that US has imposed on Indian goods. And the sectors that are going to affect by these 50% tariffs, including the textile sector, gems, jewelry, leather, footwear. So, if you look at all these different sectors, now one distinctive feature that these sectors have been known for. So the distinctive feature is these sectors are labor intensive sector. Now what is a labor intensive sector? Now any sector which can actually create a large scale employment opportunities for a semi-skilled workforce is called as a labor intensive industries or labor intensive sectors. So we all knew textiles, gems, leather, footwear. So all these different sectors are labor intensive sectors, right? So therefore, they are a critical importance for India, particularly with respect to creation of employment, economic growth, social security, social safety nets. And in fact, most of these sectors, for example, textile sector, leather sector, footwear sector, they also employ women as well, right? So therefore, women are also going to be affected by the 50% tariffs that US has imposed on Indian goods, right? So I hope you have understood the context very briefly. So let's understand other important dimensions as well, and the other important dimensions of it. Now, in fact, if you look at India's overall exports to US, now in fact US alone accounts for 18% of India's total exports. Now imagine that India's exports are 100 billion. Now this is an imaginary number, so India's exports to US 100 billion, and now India exports 18 billion worth goods to US alone. So therefore you can imagine how US is very important for India in terms of trade. And it is also a well-known fact that India has been enjoying a trade surplus with US. However, when US has imposed a 50% tariff on Indian goods, so it could lead to around 30 to 35% of cost disadvantage against the competitors. Now what are the competitors to India? For example, China, Indonesia, Vietnam. So all these different countries are called as cost competitors for Indian goods. Now imagine a carpet which is manufactured in India, and the same carpet is also manufactured in Vietnam or Indonesia. Now in fact, because of 50% tariffs, Indian carpets are more expensive in US compared to carpets manufactured by Vietnam and Indonesia. So therefore Indian carpets become less competitive compared to carpets manufactured by Vietnam and Indonesia. So therefore Indian products are less sold in the US markets, and that is going to severely hit India's exports to US. So that is the overall impact of tariffs imposed by US on Indian goods, right? So however, in the long term, India is going to negotiate with US, and these tensions would also calm down over a period of time, and then will trade pick up further, right? But US has given the reason that India has been importing oil from Russia. Therefore India has been indirectly funding Russia to fight a war against Ukraine, right? So US President Donald Trump also trying to end this Russia-Ukraine conflict, but they believe that India has been indirectly funding the Russian war effort. But this is not true, because China is the largest buyer of Russian oil, so no tariffs on China. And the European Union has also purchasing natural gas from Russia. Turkey, for that matter, Turkey is also purchasing the natural gas and crude oil from Russia. So no tariffs on these countries, but only targeted India, right? So no doubt that this is going to have a huge impact on Indian economy. So it is going to affect 1% of India's overall GDP, and apart from that, India's total exports, 18% of the goods are exported to US, right? So therefore it is going to affect India's overall exports to US. However, so at this crisis movement, so it is being said that the strength of a nation lies in the strength of its women. Now no doubt that the geopolitical unpredictability or the geopolitical tensions are very common in present day world. So therefore India is to navigate these geopolitical conflicts or tensions, right? So therefore it is being said that the strength of the nation lies in the strength of its women, because of the tariffs on Indian goods, particularly on labor intensive sectors. So that is going to affect women employment as well, female labor force participation as well. So but we need to understand the potential that the women have in India. They can contribute to economic growth, economic development as well, right? So in fact, India's failure to economically empower half of its population. Now when I say this, India's female labor force participation is very less compared to other developing countries. So India has been performing very poorly when it comes to the engagement of women workforce, right? So therefore we can say that India has failed to economically empower half of its population. Those are women, right? So it is not a social concern, rather it's a strategic liability on the part of India. Now if you look at a woman in China, so they actively engaged in manufacturing. Every woman have been actively engaged in the manufacturing sector. right? But India has largely failed to economically empower a large woman population, and that is a failure on the part of India. And apart from that, these tariffs that US has imposed on Indian goods would further destabilize the employment for millions of Indian women as well, because as I have already told you that these tariffs primarily targeted the labor intensive sectors, right? So the labor intensive sectors, if they are not able to export their goods to other countries, if their products are not attractive in countries like US was considered as a primary destination for most of these goods, then it could potentially destabilize the employment for millions of Indian women, right? So therefore, the textile sector, gems and jewelry, leather, footwear, so all these sectors, so they employ nearly 50 million people, right? And all these different sectors together face a export decline of 50%. So 50% export decline that they are going to face, right? And in fact, if there is export decline of 50%, don't you think that it will lead to a mass layoff of people who have been already engaged in these different sectors? And in fact, if you look at the female labor force participation in India, so this female labor force participation is just 37% and 41.7%. It is much lesser than other developing countries. So if you look at the global average of female labor force participation, it is 60%, but in India the female labor force participation, it is just 37% in urban areas and 41.7% in the rural areas, right? So it is much lesser than the world average of 60%. So therefore there is an urgent need to significantly increase the female labor force participation in India. And apart from that, according to the International Monetary Fund, now closing gender gap would boost India's GDP by around 27% in the long term, right? This is very important that it should increase India's GDP by around 27% in the long term. And that's where India should focus on economically empowering women, increasing its labor force participation, skilling women, educating women. So all these different areas that India should immediately prioritize and India should immediately focus upon, right? But this is a promise that is stifled by the cultural constraints. Now India is a patriarchal society, a backward society. So these cultural constraints acting as a barriers or hurdles for educating women, or they're not encouraging women employed somewhere, and they're not encouraging a skilling woman, right? So apart from that, there's a policy inertia, lack of political will, and the systematic barriers which are existing to unemployment. So all these are the major problems. For example, sexual harassment of women at the workplaces, lack of safety. So all these are the hurdles or the barriers for improving the workforce participation of female labor force participation in India that has to improve. However, the other dimension of it, as I've already repeatedly emphasized on this aspect, so India is a country with a huge demographic dividend. Now what exactly is a demographic dividend? The total number of people or the population who are in the working age, right? So India is the largest country with a huge demographic dividend. We have a largest number of working age population, right? So since we have a large demographic dividend, it provided us a window, right? So what does this window? Now when I say this window, this demographic dividend will not last long. So it will last for a very specific period of time in India's case. So this demographic window will last up to 2045, and up to 2045 or within 2045, so India has to use its existing demographic dividend to grow and develop. India has to achieve inclusive growth and inclusive development, and that is very important, because after 2045 what happened, the number of dependent population will substantially increase, right? So the government need to fund the welfare programs of these dependent population, and population growth will also decline after 2045. So it has already started stabilizing. So therefore we need to use this demographic window in a proper way. And in fact, the window which could close by 2045, so it was once fueled the growth rate in China, Japan and US. So all these countries have experienced a significant economic growth because of the demographic window that they have, right? So however, all these countries growth rates are now flattened, right? So now flattened because their demographic window is over. Now the birth rate has been declined and the number of dependent population have increased. The number of working age population are also less, and because of this reason they have been experiencing the flattening growth curves as well. And after 2045 also India is going to go experience the same phase as well. So therefore, this is the right time that India must act to convert this, this fleeting dividend into sustained prosperity. So we need to build the prosperity, and that is very, very important here. So this means fully integrating women into the workforce. So we need to integrate women into the workforce. We need to increase the female labor force participation. Now, how can we increase the female labor force participation? So we need to educate the women. We need to provide health care to women. We need to skill the women. So focus on skilling women. We need to encourage the entrepreneurship among women. And all these factors play a very, very important role in substantially increasing the women workforce participation. Because, in demographic dividend, when we calculate the demographic dividend, so women also part of the demographic dividend. So we should also effectively use the existing demographic dividend, including the women labor force as well. And however, if you compare the labor force participation in urban areas and the rural areas, so labor force participation in rural women is slightly good. It is above 40%. But the labor force participation of women in rural areas is mostly unpaid and low productive family work, and that is the major problem. However, in urban areas, the female workforce participation has stagnated, right? So it is stagnant. When I say stagnant, now that means there's no improvement or there's no increase in the female labor force participation in the urban areas like the rural areas have been experiencing. And there are multiple reasons for that. The sexual harassment of women at workplaces, they have the safety concerns, and they have the security concerns, and even unreliable public transport, lack of sanitation services, and even crushing burden of unpaid care work that the women have been going through. Right? So all these factors are discouraging women to take up or being part of the labor force participation, and that overall reducing the participation in the labor force. So that's why India's labor force participation is less than the global average of 60%. And in fact, India risks the fate of the southern European economies. Now, once the southern European economies also used to enjoy the demographic dividend. So despite having demographic dividend, the southern European economies were failed to effectively utilize the demographic dividend. And because of those reasons, they were not able to achieve adequate amounts of growth and development. So therefore, India might also face the same story of the southern European countries if it is not able to use the existing demographic dividend in an effective and efficient manner, including the women workforce participation. So therefore, what should be the way forward in this context? So if we talk about the way forward, a proper way forward in this context. Now, as I've already told you that US has imposed 50% tariffs on Indian goods which are exported to US. Right? So this tariffs are a wake-up call for India. So India should not depend on one single country. For example, 18% of the goods are exported to US. Right? So India should not depend on one single country. There is a need to further diversify India's export basket. So we need to look for new destinations rather than depending on one single country, and that is how those countries are arming the trade. Right? So therefore, India's economic vulnerabilities are not just due to the external threats. Right? So we should not look at the vulnerabilities from the external point of view. So we also have the internal weaknesses. internal problems or internal threats as well. So we should also look at the internal threats, but not just at the external threats, right? So the economic vulnerabilities of India are because of the internal neglect that we have. Now when I say internal neglect, the policy inertia, lack of political will, the social barriers which discourage women's workforce participation or labor force participation, right? So because of all these reasons, we are not able to tap the working age potential of a working age woman. And working age woman also a very important component of the demographic dividend. Now if we are not able to tap the potential of working age woman, there is no point that India will not achieve, or India will not utilize its existing demographic dividend in a better and efficient manner. Now in fact, empowering women is not a social gesture, it's a growth imperative, right? So it's not just about the social gesture, that it's a growth imperative, right? So that's how India can achieve inclusive growth and inclusive development long term. So however, increasing labor force participation of women is a linchpin of the demographic dividend utilization. Remember that in demographic dividend, 50% of the population are women. So therefore, we need to increase the women workforce participation, and that plays a very important role in further increasing or improving the export competitiveness of Indian goods and equitable development of India. And India can also achieve the goal of becoming a developed nation by the year 2047. However, if India seeks to become a true global powerhouse, its progress must be built on the shoulders of both men and women. It should not depend on men alone, right? So it should depend on the responsibility, or it should be the responsibility of both men and women. So they should equally contribute for the growth and development of our nations. So at this point of time, India stands at a crossroads. So it can rise by investing in its women. When I say investing in its women, what does it mean? So as I've already told you, that investing in its women actually means that you invest in healthcare, education, skilling, entrepreneurship of women, and that is very important. And you should also make provisions or laws for improving safety and security of women in workplaces and better implement them, right? So that can substantially increase the women workforce participation in the in the economy. Or you can also falter by ignoring them. So you can you can also do another way, that you cannot take care of these things, right? So one path, so if you invest in women, it leads to resilience and inclusive growth and development of our country, and we can also achieve the growth of a developed nation state by the year 2047. But on the other hand, if you ignore these things, it leads to the missed opportunities and the economic fragility, right? So I hope you have understood this topic, and this is very important for the Gender Studies paper 3 and paper 2 as well. So next important topic is inclusion is empowerment. Now how financial inclusion leads to the empowerment of the marginalized sections of the society, the neglected sections of the society. And this topic has been given in the Indian Express newspaper. And this is very important for the Gender Studies paper 3, because financial inclusion itself is part of the syllabus points. Now let's understand the context of this. So the context is that, now when I say financial inclusion, so what does it mean? So financial inclusion actually means that access to the financial services. Now the financial services access without any discrimination, such as banking, insurance, deposits, savings, institutional credit, pensions. So all these services are accessible to every citizen without any discrimination. In a very simple terms, it is financial inclusion. So this financial inclusion is meant to empower individuals and businesses, and it could foster growth, reduce poverty, and it also promote the social equality as well, right? So if you are able to provide access to these financial services to every individual, don't you think that those individuals would get the institutional credit, right? So it would promote their businesses, it would foster the growth, and it can reduce the poverty, and it can also promote the social equality as well. So therefore financial inclusion a very very important concept in any country, particularly true for India. And in fact, the government backed financial inclusion drive is very important for a developing country like India. Now, one example for a government backed financial inclusion drive is Pradhan Mantri Jan Dhan Yojana that was launched in 2014 August 28. And this is a flagship program that the central government has launched, which aimed at financial inclusion. And in fact, it is one of the most successful programs in India, right? So in fact, this Pradhan Mantri Jan Dhan Yojana primarily aimed to provide universal access to banking services, and it also aimed to ensure that every household, particularly the disadvantaged, marginalized sections of the society, so they can come forward and they can also participate in the formal financial system. So that is the objective of this, the Pradhan Mantri Jan Dhan Yojana. So let's understand some important details with respect to Pradhan Mantri Jan Dhan Yojana and its massive success that it has achieved. Now it is being said that the Prime Minister Jan Dhan Yojana is the world's largest financial inclusion program. So the objective of Pradhan Mantri Jan Dhan Yojana is to promote financial inclusion through opening zero savings bank account for every individual who is above 18 years of age. So that is how it aimed at achieving the financial inclusion in India. Now, before the Pradhan Mantri Jan Dhan Yojana, only 59% of Indian households and 35% of the adults in India, so they have the bank accounts, right? So this was the scenario before Pradhan Mantri Jan Dhan Yojana was not launched. But after 11 years, Pradhan Mantri Jan Dhan Yojana was launched, almost 100% of the households and 90% of the adults, they have the bank account. And that is the massive success that the Pradhan Mantri Jan Dhan Yojana has achieved over a period of 11 years. Now earlier, before the Pradhan Mantri Jan Dhan Yojana, so the informal credit systems were very popular and they used to exploit the marginalized and disadvantaged sections of the society with a very high interest rate. But the informal credit systems, so they used to trap the marginalized sections of the society in debt cycles. So now they become relics, now they become less relevant. So why? Because this is a large scale financial inclusion drive that the government has launched. And in fact, women hold 56% of these accounts, and it showcases that the Pradhan Mantri Jan Dhan Yojana is a strong focus on gender inclusion, right? So it is very very important when you are when you have aspirations to economically empower women, then you must make efforts to financially you must make effort for the financial inclusion of women. So that is a gender inclusion through Pradhan Mantri Jan Dhan Yojana. And in fact, so far as per the data, the Pradhan Mantri Jan Dhan Yojana accounts the total amount, the total balance is 2,68,000 rupees, and it is a 17-fold increase since 2015. And 16.2 lakh bank mitras, they are also called as banking correspondents or business correspondents. So they deliver the banking services to the remote and rural areas, those areas where there are no banks or no banking facilities. And in fact, Pradhan Mantri Jan Dhan Yojana accounts have streamlined the DBT and also ensured that these subsidies, relief payments, so they reach the beneficiaries without any intermediaries as well. And in fact, during domestication and COVID services, Pradhan Mantri Jan Dhan Yojana accounts facilitated rapid financial support as well, right? So therefore, Pradhan Mantri Jan Dhan Yojana altogether is a massive success in India. Now apart from that, today 99.9% of all inhabited villages, so they have a banking outlet, whether a branch, business correspondent or Indian Post Payment Banks within 5 kilometers. So therefore they play a very important role in accessing or ensuring adequate access to the banking services to the people and penetration of these banking services to the remote and rural areas. And therefore overall improving the financial inclusion, increasing penetration of the banking services to the remote and rural areas have helped extend the life and accident cover Jan Suraksha of 2 lakh through Bharatiya Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana. Right. So these are essential social security schemes that are being extended to the people after this Pradhan Mantri Jan Dhan Yojana scheme has been launched. However, an increasing number of people who are working in the unorganized segment are today able to get a much needed financial security by enrolling in these Jan Suraksha schemes, whether it is Pradhan Mantri Jeevan Jyoti Bima Yojana or Pradhan Mantri Suraksha Bima Yojana or Atal Pension Yojana. So all these schemes have helped in ensuring the financial security for the marginalized sections of the society. Right. So if we talk about the financial inclusion, right, so few things that we should remember here. So if we talk about the financial inclusion, now it is initially nationalization of banks have been started, right? So through a huge expansion of branches into the hinterlands or remote and rural areas. And apart from that, the crores of banks accounts are also opened through Pradhan Mantri Jan Dhan Yojana, and direct benefit transfer has also been started. And in fact RBI also come up with a number of different initiatives which primarily aimed at promoting financial inclusion, increasing penetration and outreach of banking system to the remote and rural areas, thereby improving the last mile connectivity through initiatives like India Postal Payments Bank. Right. So apart from that, the bank account, ATM and debit card are other means, affordable credit, insurance, mutual fund, pensions, and all other schemes through direct benefit transfer. So these are the major aspects of financial inclusion. Now let's understand the need for the financial inclusion. So what exactly is the need for the financial inclusion? So the need for the financial inclusion including inclusive development. So financial inclusion will ensure access to the formal sources of finance, and it would further deepen India's financial system, and it will develop a culture of financial innovation and also reduce the leakages in the public service delivery as well. Right. So that's how there is a need for the financial inclusion. So the next important topic is a 50% tariffs imposed by US on India. They come into effect from today onwards, 27 August. So let's understand the impact of US tariffs on India's goods and how India can cope up with those massive tariffs. So the context is that a whopping 50% tariffs that US has slapped on Indian goods, it come into effect from today, which is August 27. And as we have already discussed, because of the 50% tariffs imposed by US on Indian goods, the worst affected sectors including textiles, gems, jewelry, carpets, furniture and shrimps. Most of these sectors are the labor intensive sectors, so therefore the labor intensive sectors are going to be the worst hit sectors because of the 50% tariffs that the US President Donald Trump has imposed. Now let's understand what will happen to US exports goods now. Right. So there are a number of sectors which export goods to US markets. So what happens to those goods? So let's understand this. Now what are these tariffs? Now if we talk about the tariffs, so they are a tax, a kind of a tax. For example, in this case, a tariff is a tax that the US government has imposed on Indian goods. Right. So when the Indian goods enter into the US market, right? So understand this. I'll explain this in a very simple term. So when Indian goods enter into US markets, so the buyer of Indian products need to pay a higher amounts to buy Indian goods, so therefore it is called as tariff. So therefore these tariffs are very often passed on to the customer buying those goods. So therefore Indian goods would become more expensive compared to its competitors like Vietnam, Indonesia and China. So if goods are more expensive, then automatically the demand will come down, right? So that is how these higher tariffs are going to affect Indian goods or India's exports to US. So for example, Indian carpets become more expensive in US because of these tariffs. So therefore, consumers will prefer buying carpets from countries like Vietnam and Indonesia, because they are less expensive compared to the carpets manufactured in India, because Indian carpets are very expensive because of the tariffs that the US has imposed. So therefore, Indian exporters will suffer overall, even though the burden will be shifted on to the consumers in US. So Indian exporters will suffer because there is less demand for the Indian products in US markets, and that will ultimately lead to the declining of India's exports to US. So one way out of these exports will be to sell their goods in India itself. The exporters can sell their goods in India itself rather than exporting those goods into US markets. The other option would be exploring the alternatives, the European markets, the South American markets, the Middle East markets, right? So therefore you can also explore the alternatives, you can also diversify the export basket, but this is not easy. It takes time, right? So in fact, the 50% tariffs can also lead to the job losses as well, because it is going to primarily affect the labor intensive sector. So therefore it leads to the job losses as well. So in fact, all of this will definitely leads to the job losses for traders, or losses for traders, compounding this existing employment problem in India. Now, one of the major advantages India enjoys as of now in the export sector is that the labor in India is very cheap, right? So cheap labor, Indian goods would become more and more competitive in markets such as US and Europe. So therefore there will be more demand for the Indian goods because of the cheap labor. But on the other hand, for Americans, goods imported from India are cheaper than those made in the US itself, and that's why they will buy Indian goods, right? So therefore the availability of cheap labor has meant that manufacturing in India is still not as mechanized as in many other countries, right? So this is how the tariffs are going to affect the labor intensive sectors in India, and it could also leads to the job losses as well. So in another article, The Hindu, it has been asked that the Supreme Court has questioned why judiciary can't review inaction of the governors on bill. So let's understand the context. So I'll explain you the context. Now what happened was, Tamil Nadu State Legislative Assembly passed several bills and sent those bills to the governor for his assent, right? So however, Tamil Nadu Governor R.N. Ravi, so he is not giving assent to the bills. So in a democracy, in a parliamentary democracy, what happens at the state level? Once a bill is passed by the state legislative assembly, it will be sent to the governor for his assent, and once governor gives his assent, only then the bill will become an act. Now in this case, the governor is not giving assent to the bills, right? So therefore Tamil Nadu state government has approached the Supreme Court, right? So in fact, Article 200 of the Indian Constitution has has provide certain options for the governor to give his assent to the bills. So he can either withhold his assent to the bill, he can send the bill for the reconsideration of the state legislative assembly, he can give the assent to the bill, and he can also reserve the bill for the consideration of the president as well. So 4 options before the governor under Article 200 of the Indian Constitution. But the problem is that Article 200 has not mentioned any time limit within which the governor must give his assent to the bills, and therefore the Tamil Nadu government has approached the Supreme Court. Now, in this case, the Supreme Court has told the governor that the governor must give his assent to the bills within 3 months in case of bills. In case of bills, the Tamil Nadu governor must give his assent to the bills within 3 months. Right? So, therefore, after that, the president sought a clarification from the Supreme Court that whether can judiciary really interfere in the matters of the executive. So because of this reason, the Supreme Court asks why judiciary can't review the inaction of the governors on bills. Right, so governors were just sitting on the bills for a long period of time, so therefore hampering overall the democratic functioning. Right, so that's why it has been in news, and we have discussed this several times as well. And overall, that's all in this lecture, and thank you so much.